What is up, traders? Welcome to my YouTube channel, and in this video I'll be showing you guys how to master reversal patterns and corrections, right, using one simple tool, which is the Fibonacci retracement tool. Right, let's get into it. So as you guys can see right here, we have ourselves the United States dollar against the Canadian dollar. So that's the pair that we're dealing with right now. So already, if you're familiar with trading, you should already see or be able to spot that we have ourselves an uptrend, right? Why do we say that this is an uptrend? Is because on this market right here, price keeps forming higher highs and higher highs and lower highs, right, as such, right? So we can already see just by this that we have ourselves an uptrend. And remember, guys, the market will not move perfectly. The market will fluctuate in whatever way that it wants to, right? So just always bear that in mind. So another way of identifying what trend we have is by actually using trend lines. So could easily just grab this trend line, and then if you drag it, you'll notice that we have ourselves a channel. You just clone that, drag it to the upside, as so actually. Yeah, and you'll see that we have ourselves a channel right here, right? So we already know that price is in an uptrend because this channel right here is ascending, meaning that it keeps on going higher, right? So the next thing to do is that we have to identify our areas of interest, which is where our resistance is and where our support is. So previously, you guys can see that price was failing to break above this area right here, meaning that whenever price would get to this area right here, there would be a lot of influence from sellers selling into the market. So basically we're pushing price down, right? We're pushing price down, but eventually the buyers overpowered the sellers and price just kept on buying and buying. So usually when we experience this breakout, we already basically know that we're going for a buy, right? So just to confirm, usually what you want to do is, let me just do this. What you want to do is wait for price to come down here, retest, and then that's when you can enter your trade somewhere around about here, right? But then price did not do that this time. In fact, it just like shot straight up and took its time to get down here. So eventually we can see that price price came down here. But then since this is a channel, if you want to increase your probability into the amount of money that you can make, if you want to actually increase your chances of actually making money, the best thing to do is just wait for price to get to this confluence area right here, to wait for price to touch this bottom trend line, right? But then still you would have to narrow it down and then focus on this channel that we have right here. In case you guys didn't notice, we have a mini channel inside of the main channel. So just do this. Sorry. So we have our top trend line right about here, right? So now to even increase your chances even further, because what could happen, worst case scenario, price could just do something like this. Let me show you. Price could trick buyers into entering the trade, only for it to come down here and then just sell, right? That's worst case scenario. So if you want to actually be 100% sure that price is gonna buy, what what you should do ideally is wait for price to break above and then wait for it to retest, and then that's when you enter, and then you know for sure that price is actually buying. So now we know we have to enter like buy positions, right? So what do? We have to wait for that break above for that breakout above this trend line. So let's see what happens. Actually, before we even do that, let's go to the lower time frame, because when I'm looking into entering trades, I go to the lower time frame, 30 minutes or the 15 minute. Actually, let's just do the 15 minutes actually, because I want us to see everything in detail, right? So bravo. So as you guys can see right here, we are about to get that break above. Good. So now at this point, we know that we have our break above. What do we have to now do? What we have to now do is we know that price has to retest this trend line, right? So now what we have to do at this point is predict where price is gonna retest at before it continues buying. So this is now where the Fibonacci retracement tool comes in, right? So we're just gonna go ahead and grab our Fibonacci. There we go. And then we always place it at the lowest low, right? We place it at the lowest low, and then we place it where price starts retesting, right? So, and guys, don't get confused, right? When I say the lowest low, I mean from where, because this is the 15 minute, right? When you go to the 1 hour, let me show you. We just want to grab that one impulsive move and where it ends. So just give me a minute. We can see right here, we just from here, let's do this. No, that's not the one. From here, from this point right here, we have an impulsive move to the upside, right? To where our area of interest is. So yeah, let's go back to the 15 minute. So at this area right here, we're already seeing that price is preparing to go for a retest, right? Cool. Now let's see how this plays out. Before we even let this play out, let's actually go into like trying to predict where price is gonna retest, right? Where price is gonna bounce off before it goes for a buy, or where price is gonna form a mini support area, right? So a lot of people would pick this area right here, but I don't think we're gonna get to this area right here because price already broke out. If it goes back into the channel, then I'd be concerned. I wouldn't even think about buying. So that leaves us with one option. This area right here is where I think price will retest. There's 23.6% area. This is where I think price is going to retest. Let me show you why I say that. Let's go to the 1 hour time frame. So we basically want to look for the area where a lot of buyers previously entered the market, right? So if we look at this 23% area, we can see, let me do this. This is the 23% area, right? We can see that previously whenever we price would come to this area, we'd see the influence of a lot of buyers entering the market and pushing price to the upside, right? You can see it happened here, it happened multiple times here, it happened here, it happened here. So we already know that's our area of interest. That's where price is most likely to bounce off and buy. So at this point, we're just waiting for price to touch this area, and for the next confirmation, what we need is for price to give us a bullish candle, right? So let's see what's gonna happen. Boom, this is our bullish candle. This is our strong bullish candle we've been waiting for. So even though price did not exactly bounce off exactly at the 23% area, we still had our bullish candle at the 23% area. So this is why it's so important for you guys to actually wait for that strong bullish candle. You can't just be like, okay, price has always been bouncing off this 23% area, so I'm just gonna enter my trade at this candle when price reaches that area. No, you can't do that. You have to wait for that strong bullish candle at the 23% area, which is where you predict the price will turn, and price did turn at the 23% area if we judge it based upon where the bullish candle is, which is the candle that you had to wait for either way. So now we have our second confirmation that, okay, this is where price is gonna continue buying. So just to make sure that this is the candle that we're gonna close off by, we're just gonna wait for the next candle to form. So let's see. So at this candle right here, so you see immediately after this candle formed and then we started like forming the new one, you would have entered. So at the closing of this candle right here, this is where you would have entered your trade. So let's go and grab our long position setup, because now we're simulating trading in real time, right? And where would you have placed your stop loss? Your stop loss would have been placed below the previous low, which is this area right here. So let's say hypothetically you just entered when price reached the 23% area, because that's where price has been let me say that's where a lot of buyers have been entering the market. Let's say you were let me say careless enough to do that. You would have still survived the trade if you had placed your stop loss below the previous low, right? So that's why that's also important. But yet still, I'd still recommend you wait for this strong bullish candle first around your area of interest. But then yeah, cool. So now how do we know where to place our take profit, right? Because now we already we entering the market. We want to know how where to place our stop loss, take profit. So you place your take profit, you predict where your take profit is going to be by using the Fibonacci instrument. So this is where it was previously at, right? And this is where we entered our trade, right? This area right here is where we entered our trade. So we basically take the bottom part of the Fibonacci and then we place it, take the bottom part of the Fibonacci and then we place it to our entry point. This is where we entered our trade, right? So that's where we entered. So what this now means is that our take profit is going to be at the end of the Fibonacci. So we use the Fibonacci as a measuring instrument. Cool. So let's see how the trade would have played out. So usually, even though this is where you should put it, usually I just like putting it, setting the take profit slightly lower than where I'm predicting price to go. Because sometimes price will get close to your take profit and just decide to turn, right? Because if you've noticed, price starts slowing down when it's about to hit your take profit. So as you guys can see right here, I'm running a 1 to 2 risk to reward ratio, right? So basically, I'm gonna make twice the amount that I was gonna lose if I was to lose the trade, right? Let's see how the trade plays out. So at this point right here, we're already in profit because remember we opened our trade at this area right here. So let's go to 30 minutes before we play it out so we can see more detail. And also guys, remember, as your trades go into profits, adjust your stop loss. So at this point right here, we can see we formed a higher low, right? So after forming this higher low, I would have automatically tracked my stop loss to break even. As I was saying that whenever we have these higher lows that are created, what you want to do in that situation is adjust your stop loss, right, to break even. What this does is it enables you to run a risk-free trade. What I mean by that is that even if price decides to like turn on us and like go for a sell, when your stop loss gets hit, you're gonna break even. You're not gonna lose any money. You're not gonna make any money, right? So you're gonna break even. So that's one scenario. The other scenario is that price just keeps going and like your take profit gets hit. See, so that's what you would ideally want to do. So let's just let this trade run and see how this would play out. Boom, our take profit would have gotten hit just like that, just like that. Exactly, guys. You see this, you see what just happened right now. This is the reason why I like adjusting my take profit just slightly lower than the target or where I'm expecting it to get to, right? Because I mean, like most of the times, I'd say 90% of the time, when price is about to reach a take profit or an area of interest, it starts slowing down, and we don't want that, right? We don't want that. So yeah, this is how you would have made your money, guys. This is the power of the Fibonacci, right? So let's move on to the next pair, which is the United States dollar against the Swiss franc. My internet is being a bit slow today, so I'm sorry for that. Okay, as you guys can see right here, we have ourselves a channel. So I can explain this properly to you guys. We have ourselves a channel, right? And this is actually a trade that I'm currently in. What I'm about to break down to you, this setup that I'm about to break down to you, is the setup of the trade that I'm in right now, like literally right now as I speak to you guys. So as you guys can see, we have a channel, right? We have a channel and we have our trend lines. So with these trend lines being set up, we can easily tell that we have an uptrend, right? We have an inclining diagonal. That tells us we have an uptrend, right? We don't even have to do too much, but then for those of you that use different techniques, we can tell that it's an uptrend because we have our higher highs and our higher lows, right? This is what we have going on right here. You can just end it there, it's fine. So we see that this high is higher than the previous one. This high is higher than the previous one. Same for these lows. This low is higher than the previous one. This low is higher than the previous one. My bad. So we can see that price already touched the top trend line at least 3 times. So from that third touch, we can already know that, okay, now we're expecting a breakout. So in most cases, the breakout on an inclining diagonal is going to be on the bottom side, right? So we're already expecting a sell, right? But then anything can happen. So let's just see how this plays out. Boom. We had this breakout. And then let's just wait. And then from the moment we get the breakout, actually, let me just, yeah. From the moment we experience the breakout, what we have to now do is wait for this retest, right? But then now the tricky part is, how do we know that this correction is now done and we're going to continue selling? We can never know. The only way to know is for us to implement the Fibonacci instrument. So we're just gonna go ahead and grab our Fibonacci retracement tool, and we're gonna basically take it from where our impulse move started to this low that you see right here, right? So looking at this, a lot of people or a lot of traders would think this area right here is where we're gonna see price retest because we have a lot of resistance, or this is where the previous support actually was, right? But then I would disagree. You literally want to see price retest where we saw the influence of a lot of sellers, right? Because we're trying to enter a sell trade, right? That's what we're trying to do. So ideally would see price retest around the 61.8% area, right? Around the 61% area. So this is because previously in these previous events we saw that whenever price would come around this area of interest, it would fail to break above because there would be the influence of a lot of sellers. A lot of sellers would enter the market and price would just go and sell and then come again and try to break above again and then fail because there's a lot of sellers entering the market. As you even saw right here, there were a lot of sellers who entered the market, causing the price to even break out of the channel, right? So we now know that this is where we're expecting price to retest and actually continue selling. So knowing that, we're gonna go ahead and place our short position, right? And then where do we place our stop loss? We place our stop loss above the previous high, which is right here. So that's where we place our stop loss. And how do we know where we place our take profit? Remember guys, we place our take profit, we use the Fibonacci as our measuring tool, and then wherever the Fibonacci ends, which is here, that's where we place our stop loss. So not our stop loss, our take profit, I'm sorry. But then knowing how I work, I feel more comfortable if I place my stop loss just slightly above where the Fibonacci instrument ends, right? I feel comfortable placing my take profit just slightly above where the Fibonacci ends, right? So we can now remove this. Can now remove the tool and see how price plays out. A lot of traders would have entered the trade round about here when they saw this bearish candle, they would have instantly gone kicked out the market. So this is why it's very important for you guys to wait for price. And then price played out, and we can see we started going into profits. So remember guys, I told you that I'm currently in this trade. So this is where price is currently at this moment. And we can see that we're close to hitting our take profit, and I'm confident that we're gonna hit our take profit. So if you actually would like to see me make a part 2 where I update you on how this trade went, make sure to hit the like button and comment in the comment section below. So even though we haven't hit our take profit yet, this was still very a good example in showing you how impactful the Fibonacci instrument is, and how you knowing where the most sellers or buyers, in this case sellers, enter the market, how that actually is powerful in actually helping you enter trades at the right time, right? Can see that we entered at the perfect place, which was around about here, and you can see that played out beautifully. So yeah guys, that's about it for this video. If you guys would actually like me to make another video where I explain how to trade retracements and how to use the Fibonacci, make sure to also comment that in the comment section below, right? So yeah, let's move to the outro. Alright guys, we've now reached the end of the video. If you guys would like me to make another video explaining retracements, how to trade them, and how to use the Fibonacci to aid you in trading and understanding retracements, make sure to also like again and comment in the comment section below. And even if you have like different video suggestions, let me know in the comment section below. And if you actually would like to join my WhatsApp group where I give out free trading signals, make sure to hit the link in the description. And to also trade with my recommended broker, hit the description below.